All righty. Right. It is. Oh, shut up. That's the new golden doodle or whatever he is. He's some doodle. All right. So I call a bear market yesterday. I call it. And of course, the market rages today 2.76%, 1.7% up here. We're above the overnight high. We're above VWAP and the E minis. We're above the cash open. We're above everything. But keep in mind, this is a day where the Fed matters. So, I don't think we've, what time is that? Normally like 2 o'clock Eastern when all those minutes are released, and we'll see what happens then. But for now, it's just another raging day. So we'll see what happens. NASDAQ's up 2.74%. So it's definitely leading the way between the two. And my call of a bear market looks really dumb right now, but that's okay.
It's not.
Yeah, I think we're there definitely, Ken. I think we really are. And look, I don't put too much stock. I talked about this yesterday, but I know a lot of technicians do in the death cross, right, where the 50 moving average crosses below the 200. We see that we have a very downward sloping linear regression channel. So we're only up to the middle part of that. So in my mind, yeah, this is what we're looking at to say, hey, we are headed, we're in the bear. We are in the bear.
This is just a rally right now.
Right. And what we'll expect with this rally is that the rally will be met with resistance and will be sold back down. So we'll see. We'll see how that works out. But I agree with you, Ken. I think we're on the right path here.
Yesterday's indications were in Mondays were strongly to the upside. We were poised like a coil, spring or rubber band pullback, snap really back a lot, and once I mean, I'm trying to think of a nice way to say it. It's basically spent all its bullets, and we've got it. This will go on for a little while, maybe Friday, Monday kind of thing. But we still have some serious downward move by every indication that I have, except for two, and those are the two indications indicate that we were a strong up move, and it's temporary. While you were getting ready, I was looking at how am I going to handle this. And basically what it is I'm going to be peeling off a lot of short puts.
Yeah. Well, I'll tell you how I handled it yesterday. And remember yesterday, I was telling y'all that in our program of what we're doing, we certainly gave ourselves permission to dump out of our TQs and our UPROs and all of that. A lot of you probably already have dumped them. And if it closed below, if price of SPY, remember that's how we worked it. We didn't look at the TQs and the UPRO. Our little rule was if SPY closes below the 200 daily moving average on SPY, we have permission to get out. Now, how would that have looked at the end of February? So we're in March. Let's see, that would have looked right here. Right? We would have done it on day one, on March 1st. Here's the day that we would have barked out. So yesterday, I sit there and I struggle with it a little bit because I go, I don't necessarily want to puke positions, but at the same time, if I am of the belief that we are in a prolonged bear market and we just don't know it yet, then it's going to behoove me to get out. And that's what I did. I puked. I'm not going to say puke because it was a calculated effort, but I got out of the UPROs. I got out of the TQQQs. I got out of all that. So I think that that's a good move. Now, on my spreadsheet, I'm not going to tell my spreadsheet that I'm out because I want to keep running AIM and being able to accumulate additional shares. But I think that we may be at the start of a prolonged bear market. What does prolonged mean? I'm saying, maybe 6 months or more. Now, I am the worst trader on the planet. Y'all know that. I'm often wrong. My timing is often terrible. So if I got out here, which I thought was a great time to get out because it was a nice up move, didn't know we were going to get a gap up move today. Would have been a better day to get out. but I'm still very confident in my decision. I actually had someone to message me today, and I thought it was kind of interesting. He said, you know, hey, Bob, the 111 has been so strong, you know, why not just, you know, do the 111s? And I thought, well, that's a great idea. The 111s are doing fabulous on the up and the downside. Another problem child that I have today, but I'm leaving it on because I could have rolled it earlier today. As you know, I've got a Rick trade, which is nothing more than a 20 wide credit spread on the call side. So Rick does them on the put side. I did one on the call side because of my bearish assumption that does expire today. Now, the problem is, hey, let me turn my video on. Y'all can't even see me. It'd help if I open the lid on the thing. There it goes. So the problem is, I want to wait and see what happens today when the minutes are released. You know, I'm not, well, I could have rolled that today. So if I don't roll that today, then I'll just let it expire. I'll lick my wounds and go on. I just got one contract on. So it's not like I'm doing like Rick and he's got 35 of those things on. I just got a very small one on. But guess what's up today? What's up in the portfolios today? Surprisingly, it's not really surprising because it's been such a strong trade for us, even in the turbulent markets, is the 111 trade. So let's see if we can look at that. Well, before we look at the 111, let's look at our little charts here. So we've looked at this, right? Volume has gone down. Everybody's waiting on announcements. We have the AD line slightly going up, and we are at an AD of 306. Very, 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 very strong. So we'll see what happens for the rest of the day. Now, look at this, y'all. This is kind of what's cool here. Look at where we're seeing a little bit of resistance on the E-minis. Check this out. Surprise, right? Look, surprise, surprise. It's not a surprise for those. Isn't it amazing how it touches y'all? I mean, it just touches that 43.39 line. And then it cool how the 43.39 line that we drew back on March the 1st is right here with the value area high on volume profile. I just think it's kind of cool how that works. Now, this did act as resistance a little bit on yesterday. Then we finally were able, after a couple of tries punch through that. So where are we now? We are overbought for the fair market value below. And we'll see the point of control and volume profile lines up perfectly with the 120% line on our big green monster. So we're overbought. Where do we expect this to go? We expect to go back down here, and we expect it to go back down into this area here. So we are still bearish on our chart. Chart's still bearish. Nothing has changed here. Now let's look on NQ, see what NQ is looking like. NQ, we're overbought as well. Point of control here. We expect being overbought to then go back down into the area here. Will it happen today? Yeah, maybe not. We don't know the timing on it. We just know that we believe that this will happen. So that's just our assumptions. Now, I also said something I thought was pretty interesting yesterday. And let's just bring this up and talk about a couple of things. Again, remember, I know nothing. But I was thinking about, since we've been doing the 111 on both sides of the aisle, I've been doing some call side, and we've been doing them on the put side, right? So remember, the 111, for those of you who may be new to it, is nothing more than, normally on the put side, it's buying a debit spread, right? So that is a debit spread. That's a bit deep, a debit spread for, and we'll do these on the micros. You can do them whatever you want to. But I do it on MES. Buy a debit spread that is 50 points wide. So if you were doing this on SPY, for example, you would do 5 points wide, right? So 5 points wide there, 50 points wide on the MES. And we were doing it where we could buy it for $10. Again, if you're doing this on SPY, you do a 5 point wide spread that you could buy for $1. Am I right on that? Yeah, I think so. Then we go and we sell a naked put. Say it's naked because it doesn't have a corresponding long. We sell one to where we can finance the $10 purchase that we had. So we sell one farther out of the money in the same expiration that we could make about $20 credit on, right? Credit. So that it finances that purchase. Now, and we're all doing this in about, I go closest to 60 days expiration without going over. That's where I like to put these in. That's been a very, very successful trade for us in a rough market. So now, if you believe that we're going to get two-way action, as we've been getting, right? Market's up, market's down, market's more down than up. You can continue putting these on either on the call side or the put side, doesn't matter, right? If I had my druthers, I'd put the put side on down days when the market's down big. Why? Well, it's because it has that naked put component and I can get farther out of the money. If you were going to put them on the call side, I would put those on an up day. Now, keep in mind, we hadn't tested a lot of these on the call side. So do we know that they'll do fine on the call side? We don't know that. But I had an interesting thought yesterday. Someone was asking questions, and that's when a lot of times my thought comes out. So if you believe we're going to get two-sided action, and I'm just throwing this out as I don't want anybody to do this. I just want you to think about it. If you believe we're going to get two-sided action, and you're going to put these on the call side and the put side, if you really wanted to optimize the 1-1-1 trade, then you would do this. All right, so it's a big update, right? So what would you do? Especially if you believe we're going to get a big down day in the coming days, which our chart indicates that we're going to do. So on an up day, you remember our little chart where we said, what do you do on up days? What do you do on down days? Y'all remember that? We did a little quadrant and we did the calls and the puts. Well, on up days, that's when you sell calls, right? If you're going to do the call, if you're going to do something on an up day, that's when you sell calls. And also on up days is when you buy puts because those puts are cheaper. Okay, now, so if you wanted to, some of you are thinking, God, man, well, we shouldn't trade anything else but the 1-1-1. I got you. I see the allure to it. And if you believe indeed that we're going to get two-way action, what you could do, now this maybe this is overthinking, but I just got done with the greatest snap ever. And I had Tasty Trade playing in the background on the bed on my phone, and I was just snapping away. And I dreamed I was at Tom Sosnoff's house, and Bat wanted me to throw a bag at Tom that had Dookie in it. I don't know if it's dog Dookie or whatever. And I'm like, I'm not throwing that at Tom for his birthday. Are you kidding me? So then I actually look in the bag after Tom comes in and I don't throw it to him. And the bag has a ribeye steak in it. Now it's uncooked, right? He was giving it to Tom to cook. So it's very, very strange. So Bat gets mad at me because I don't throw it to Tom. He said, you didn't throw it, did you? I go, no, I wasn't going to throw Dookie at Tom. Anyway, it's strange having them on the background, and then I'm dreaming about them. And then Liz and Jenny come in when their code comes in. I'm still napping, and that's even more bizarre. We won't go into that now. So y'all know all the drugs that I'm on. So whew, unbelievable. So if you really wanted to maximize it, and you're going to run them on the call and the put side, then what you could do is on a big update like today, you could sell your naked call component in your micros, right? You could sell your naked call. And you could do, -1, or you could do the 1-1-2 where you're doing two of them. And if you're doing one, you would sell that for around 20 bucks. If you're doing two of them, you can sell one for, 10, 11 bucks, so that you do, are able to collect the credit. And then what you do is you buy the put spread for $10. Now, I don't want y'all overthinking things like I did. I just thought if you're pretty confident based on our chart, based on everything that we're doing, that hey, we are in a bear market, things are going to go down, then on a big update like today, what you could do is you could sell your call naked and then buy your put spread. Interesting, isn't it? Because the put spread theoretically will be cheaper when you do this, and your call will be more expensive since the market's been going up. Now, what would you do tomorrow or the next day when we get the big down day? Well, then you would go and match them up, right? That's when you would buy on a big down day. That's when you would sell your naked put, and then you would buy the $10 call spread on a down day. Now, I don't necessarily want you to do it. I want you to think. That's what I'd rather you do. I'd rather you think about the 111 in those instances. Think about, if I were going to maximize it, how could I maximize it? That's how you do it. Big update today. Now, how would you match those if you're putting those into groups? That's a good question. So, and the one where I sell the call, I'd go, that's a 1-1, probably 2. I'd probably do the 2, 1-1-2 on the call side, and then maybe name it unmatched or something, so that when you get the big down move, that's when you're going to buy the $10 put spread to match it up. So that's how I would match them. I would not put the, this as one trade, into your groups. I wouldn't put this into one trade. Isn't that interesting though? I mean, and I'm just saying, if you're just going to maximize it. Now, for most of you, probably including me, you don't want to overthink it and you don't want to do this. I'm just throwing it out there. I thought it was interesting. If you think we're going to continue to get these two-way action of down, 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 up, down, 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 up, which is pretty much what we're getting, then it's an interesting thing if you attempt to maximize it. But you of course, don't have to do that. So since the 1-1-1 trade is doing really, really well, let's put us on one to the day. Now, let's see how we're doing over here. How are our 1-1-1 trades doing? And I guess I need to put them in our group so we can see. Let's see how the calls are standing up on this big up move. All right, so 1-1-2 fourth. This is one we put on yesterday. Is doing quite well, and we put this one on the put side, right? So, I mean, these things continue to do what they do, and that's just continue to pop out money. 1-1-2 the first. How's that one doing? 82%. Right? They do what they do. 1-1-1 66. Doing what it's doing. It's $50 up. 1-1-1 67. And isn't it good that we're able to see this trade in action during one of the most turbulent times in the market that we've seen in years? It's amazing to see this thing perform as it is. 1-1-1 second. Look at $60 on the open. I mean, what a little resilient trade it is. 1-1-1 68. Surprise, surprise, up 80%. 1-1-2 third. Up. Now here we're getting into our calls, right? So our calls you would think are going to be down, right? But au contraire, they don't. That's why I'm saying it's such a resilient trade. On a day when the market's up, what was it, 1 point whatever percent, 2% or whatever? It's only down, 16.25 on the day, and up 1750 on the whole trade. So it's a resilient trade too. Now the Rick trade is having a horrible time today. On the call side. But I'm not willing to close it. I'm not willing to roll it. I'm gonna let it fly, baby. I want to let it fly because I want to see what happens with the with the minutes today. We'll see how the market reacts to that. So I'm perfectly willing to let that go to full loss. But but the purpose of today's session is to say, dang, these darn 111 trades, they're doing great. So with that being said, let's build one out. Now, how you want to build one out? Well, on the big up day, I'd say definitely if I'm going to do one today, I'm going to do it on the call side, right? It just makes sense because I got that naked component. So, and I don't think I'm going to do the fancy way of doing it either. I think I'm just going to keep it simple, right? Go over here. We would go a long call vertical. Let's get that baby out to 50 wide. And because, and we may not be able to do this on the call side when the VIX is down and volatility settles down. But right now, look at this. I mean, look how far away that you're getting all these things away from the money. Let's go. So we're going to take that down to where we're at $10. And that's why I'm messing with that. So let's go down, 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 down. It's going to get stuck. Darn it. Keep on going. Keep on going. Keep on going. Keep on going. 925. So if we go there, that's 975. Move it up to 10. We should get filled, right? So everybody sees what that looks like. So let's put it in. All right, beautiful. Then we need to pay for that. So if we spent $10 on that, look at some of these bid ask. It looks weird to me. Then what you want to do is go out somewhere where we could just make sure all these look right. We want to go out somewhere where we could collect. Does that look right to y'all? That does not look right. Look at that. $4, $10.75, $8.50, $10.25. That's some weird stuff going on. So what would we do? We would go somewhere where we collect about 10. I say we want to collect 10. I'm just looking at all these. Look at this. It's almost like I feel like I need to close my program down and open it up again so I can make sure I'm getting some good strikes here. Let's see. Is y'all just showing the same thing? It just seems weird. That would be 4 and that would be 10.25. Huh. Why is that? All right, I'm trying to get in the general vicinity where I can sell something for 20 to finance that. Let's see where did we fill that at? We filled that at 46.30, 45.80. Let's go back to that. 45.80. Okay, here we go. 45.80, 46.30. So theoretically, I'd like to get farther out than that. So maybe let's see, we're long here, so we don't want to do that. You know, we could come up here to the 10.25, or we could sell this one for 12.25, which I kind of like that, right? On this big up move. And so you've got the expected move here. See how they do the expected move, 46.20, and we're moving our in a bear market. We're moving, which I've called a bear market. Oh, look at that going down to. So we could do this for $12. Make sure it doesn't switch on me to the old mid 13.25. Let's see if we can go closer to 13. It's weird that that's going to increase my buying power. Look at that. For a naked call. Jack squat crap. $12.50. Now, we're filled there. Now, here's what I really like about the 111 is when we look at the curve, right? And click the analysis tab, just kind of see what it looks like. And here's what I really like is this humongous area that we've got of a profit zone. So you see, we go all the way up to about the 48. What is that? 48.23. Y'all, we're at 43.23 now. Our break even is 500 points above. Am I right on that? And before we get there, we're going to fall into this nice little profit hump that's more than, that's why I'm saying, geez, man, 48.23, 500-point move in 40 something days in the E-minis in what I've just termed a bear market. I like that before we start losing. All right. So let's look on the downside, see what we look like on the downside. We look even better. I mean, look at that. I mean, that is profit mountain, y'all. That is profit mountain. So we got this nice mountain to the downside. And how we make this stronger, it depends if you're using this for income or you're using it for a hedge, right? So now, since I've taken off my U-Pros and my TQs and all my stuff like that, I don't need it for a hedge. I need this for income. So the plan would be to do what? To let these boogers down here decay, close those, definitely, I don't think we're going to carry those any closer than 7 days to expiration. Let these, I don't want to get into a point to where I may be forced to have to roll those again. I don't want to do that. So the plan is to let these little puppies down here, decay. So we get a profit on those. They're way, 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 way out of the money. So what this is the one standard deviation move. Let's see, where are we? One standard deviation isn't this for standard deviation lines here? So what is this? Is that the 2 standard deviation? Let's see if I got any more little dotted lines. Well, here's another dotted line. I got to figure out what their dotted lines are, but we're way, way, way away from the money. I mean, look at this. Our break even down here is 32.70 or so. We're at 43.23. You kidding me? What I said was the 32.70. Unbelievable. So I'm really, really, really liking this. And I understand why someone sent me the message today and said, hey, Bob, if the 111 performs so well in this environment, this wacky environment, why not make it a larger source of what we're doing? How can I fight that logic? I'm not certain that I can fight that logic because it has been the all-star of our 2022 by far. Okay, any questions on that? Any questions on this little stuff that I was thinking over here? It's probably more than y'all want to put into the thought of it. But if you wanted to do it, you want to maximize it, you want to try one out, and that's how you do it. You sell a call on an update like today, and you buy your put spread. So you can do that, especially if you think we're going to get two-way markets. Now, if you're not sure we're going to get two-way markets, if you're not sure that we're in a bear market, and you're not sure that we're going to go down big on a day, then don't buy into that. And again, this is just my ramblings. This is the stuff that I think about when I'm dreaming about Liz and Jenny and her having her, because she was talking about her, what is that thing? Root canal. And then I was dreaming about root canals over at Jenny's house. Real weird. But I think the 111 has proven itself to be a superstar, whether you put it on as a 111 or you put it on as a 1112. Now, wait a minute. Did I not do 2 contracts of that a while ago? I don't see. What did I do? My trade activity, I did 1 of those. So that was a 111. So I didn't collect enough credit, did I? I got to do 2 of those. So let's go sell another 46.80. Sell another one. You gotta watch yourselves, guys. 46.80. I sold this one, so I'm gonna sell another one. I need to pay for my 1, 2. And we're filled. So now we made that a 1-1-1-2. And y'all see why I had to do two, right? Because if I bought the call vertical spread for $10, I got to at least bring in $20 to pay for it. So by selling those around whatever it was, 12.25, I brought in $25 or so to pay for that. So the 1-1-1, powerful, powerful trade. It's proven itself in 2022 in one of the most turbulent markets. Why not allocate more to it? So I do plan on doing at least one of these every day. So we'll see how that goes. All right, guys, that's our session for today. Very short, very sweet. Jim, Bobby, would you recommend hedging these out somehow if you were again putting these on in an account that is currently flat? Cool thing about it is and I think Tom probably disagrees with me a little bit, but this is a hedge trade in and of itself with the debit spreads that we have. I certainly at this point would not be putting on a VIX hedge. And I didn't want anyone yesterday to think that the Black Swan hedge is no longer good. It's just that when you most need to hedge is when the market's going haywire. I mean, the market's just boom, boom, boom to the upside, boom, boom, boom to the upside. And everybody's like, we're in a bull market, baby. And then that's when it hits you, is when everybody's complacent. Nobody's complacent right now. Everybody's worried to death. My thought yesterday was that it's just not the perfect time for Black Swan hedges, I don't think, because I think everybody's on the edge of their seat now with this market. So I don't think that that's when we get that explosive move to the downside. I think we're just going to get a continual grind to the downside over the next few months. You certainly can put them on. Now, if you're going to put one on and hedge that to the downside, today's a perfect day to put on one, right? Today is the day where you could say, hey, I'm going to put on an entire tranche of the Black Swan hedge, where I'm going to sell the one that I could sell for $3 and buy 5 of the ones 50 points below. Or if you're buying into this, again, I don't want y'all to get too fancy on stuff. When I get fancy on stuff, it normally doesn't work. But what you could do is, for example, today you could buy your 5 because we got a gap open, right? Got gap up. You could buy the 5 puts for your Black Swan hedge today if you want to put a tranche on. Believing that we are overbought, believing that we will have a move down to at least the point of control on volume profile, and more likely a move down into this area. So you could buy your 5 puts today, wait for the move down, and then sell your 3 puts then. Right? Getting a little fancy, you get a little, your time in the market, I'd probably recommend you to buy your full tranche today. But if you want to get a little creative, if you believe in the chart that we're overbought, and you think that we're going to have a move down, then it'd be a great day to buy your 5 and then sell your 3 on a day when the market goes down. Why? Well, because you can move those 3 farther away from the money. We know that options on the put side are like balloons. That's a little balloon that has no air in it. It goes and the market goes down on the day. The thing pops up, so you're collecting a greater credit on your put. You move that put farther away from the money, and to fully pay for your 5 that you bought. So, and it could be a case where instead of, you're down 3 puts here at this level and you're plus 5 puts at this level away from the money. It could be that if you wait on a down day, that your long puts are here and you're able to sell your 3 way down here so that your longs are closer to the money than your shorts, and you're still able to fully finance the long puts. if that makes any sense. Okay. If it doesn't, I'm a little foggy today. So send me a message. All right, good session, guys. I think what we've reinforced is the awesomeness of the 111 trade. It's an awesome trade. Let's keep it going in whatever variation that you want to try. All right, guys, I will see y'all tomorrow.